Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. I'm your host, Dr. Alan, and I am excited to explore with you today the road to financial freedom through the Maslow investing model. Prior to embarking on their full-time real estate investing adventure, today's guest, Keke Williams, spent 20 years in management consulting and corporate sales marketing, while her husband, Peter, spent 25 years on Wall Street and in Silicon Valley. Together, they have applied their collective corporate skills, experience, and networks to their real estate investing pursuits in a way that empowers others to live their best lives. While doing this, they are finding a means to quench their own thirst for service, global travel, and adventures. So, Keke, share with us a memorable experience from your formative years that helped you to be who you are today.
Yeah, so it's funny. The first thing that came to mind, actually, when you mentioned a story from my formative years was quite a hair-raising story. I was with my siblings. I was in Oregon, where Portland is where I was born, and I spent the summers living there. My parents had split, but I had two stepsisters and then my sister and brother with me every summer there. And we would always go out riding the horses. So we had a property with all orchards behind us and these open fields. So we were often out riding the horses. So we went, all of us in a group, riding, a couple per horse and so forth. The one had a broken rein, and I was the youngest. They left me on the back of this really big, tall horse, Timber, with this broken rein, and they hadn't lifted me down yet. And I couldn't quite get down because he was so tall. Next thing you know, Timber took off back to the barn, wanted to go home. And I just remember being terrified. I mean, I was probably 10, maybe. And I was terrified. This horse is running down the middle of the street, literally down the middle of the yellow lines of the street. And I kept trying to get him over into the field, thinking I'll just jump off. Well, this horse was like not having it the whole way. And I remember at one point, I was so petrified, but thank goodness it was a Western saddle. So I'm hanging on to the horn and everything. And at one point, I just kind of started laughing. Like I thought, it's almost like a cartoon, like this, I just couldn't believe what was happening. And when I just kind of relaxed into the moment instead of panicking in the fear, and I kind of just held on a little lighter, it's like, okay, I could have like this different perspective and I could start to think about kind of like what the other options were, because I was getting out of that mental lock of being panicked, right? And so sure enough, that horse went in the driveway under the tree. I just ducked and whatever, stopped right in front of that barn. But it was just one of those things that it stuck with me. And then, of course, 20 minutes later, my dad made me get back on that same horse and go ride it again, which was very good that he made me do it. But, there's that thing where sometimes if we can just pause for a second and breathe, no matter what we're in the middle of, that's rising up fear in us, right? When we can just take a breath and clear the emotion a little bit, solutions start to come to you. The fear starts to subside. You can re-engage your brain, And so when I'm in sort of heightened circumstances in life, and it can even be just a heated discussion conversation with your teenage kid or something, it's like, whew, that flooding of emotion. Really, I need, for myself at least, I need to calm that to move towards action. And so I think the same is true with people when they're investing too. It's like when you calm, you get overwhelmed by there's so many things to think about. There's so, right? Isn't this like why process is so powerful for all of us? Because it's the breaking it down, the chunking it down into, bite-sized things that we can get our hands around.
What a valuable lesson to learn at 10 years old, and really an insightful lesson for a 10-year-old to have the insight to be able to do that in a panic situation, and then to remember that, to apply it to a broad range of experiences in the rest of your life. The research in positive psychology and in neuropsychology is just reinforcing really that importance of changing our mind to actually change our brains, because our brains are much more malleable than what we even thought they ever were 20 years ago. But our minds can change our actual brains. And you learned that lesson at 10 years old.
Yeah.
I'm sure it served you well in many instances. Yeah.
Yeah. I mean, absolutely. I think that there's this quote that, I don't know, some ancient Greek philosopher, right? It goes, the secret to happiness is freedom. The secret to freedom is courage. And isn't it though? Right?
Yes, absolutely.
Courage to grow, courage to screw up, courage to do the right hard things that you don't want to do, all those uncomfortable things, right? Because they sort of, the growth, the seeds of success come from the discomfort in new soil, I guess, Yeah,
and applying that courage, which is exactly what you did on that horse. It took courage to take that breath and just to bring all those emotions down.
Yeah. And see, I think, and maybe it's for me, like as an introvert, right? Like it's really hard for me to go put myself out there in a party, like in a big social situation. That's so not me. But, you pair me up with one person and absolutely, I can make this work. I can be like a part of a team kind of thing. And it does give me courage and confidence. And I think that, learning is a bit of a social process as well. We play off each other, we feed off of each other. And so I think this is what's powerful for us about our investor group is, it was kind of a labor of love for us. It started for us like, just doing our own thing. And then people saying, what are you guys doing? And it kind of just kept building off of that. But for us, it was always the more people we told about it, the more people that we helped encourage and get started, and the more successes we saw, that gave us more confidence and success as well. And so I think that is one of the powerful things, even for like, because our group is oriented towards passive investors, right? These people already have some other W-2 job, or they're a serial entrepreneur. They've got their active income streams, but they know they need their money to be making money too, right? But they're kind of like, they're full throttle in their things that are their passions or whatever, that they're putting their active work into already. And so how it is as an investor, whatever there's a constant learning in the background, a constant synthesizing opinions and different things that are happening in the macro and microeconomic environments and so forth to try and determine what your next moves are going to be. And so I find that like just that act of kind of being that person who's out there in it and synthesizing and sharing data and then collaborating about it is one of the things that as passive investors, they appreciate, because they might not want to have like another video or another blog article or whatever to read. But if you give them things like this, a podcast, things that they can kind of consume easily. And, and even if you take like over the course of a month, let's synthesize what's been happening, what's going on. Because honestly, this real estate is not like, it's like watching the paint dry. It's not like you're looking at your portfolio every day kind of thing, other than to manage the daily tasks. And so, giving people, I think, collecting them together, holding them accountable, learning together, having a common language, having like, the ability to sort of banter and debate ideas and opinions and that sort of thing, that makes people stronger. I think that grows their courage. I think that's one of the real benefits we've seen about how our group, the dynamic of our group, because at the end of the day, you can do all kinds of study. Lots of people are really interested in learning and they're very intellectual and whatever, but you got to get over the courage factor of putting your money down in that first investment of like $50,000 or whatever it is. And being like, okay, I'm going to wait for it to come out the other side. Okay, everything I studied, I believe, it's like that taking that leap of faith is often easier to do when you're in a group and you've been collaborating, I feel like, together, because you're with other people that you're like, okay, well, they're a smart person. They're like some neuroscientist or they're this or that. And they seem pretty with it. And right. And you all kind of share this. And then we go there and actually provide the due diligence and that sort of thing and invest alongside people. But I do think that people are really finding today, especially with what we've experienced in COVID, is that community and connection between us, that dialogue, that true engagement is super powerful to our psyche, to our progress, to the quality of our decision making. So we were like super bummed that COVID hit the year we were first starting to do events, because we wanted to do 2 a year, one in the US and then one in Latin America, like in Colombia, near where our farmland is, right? And we thought, oh, great, people can make it a vacation. They can come and kind of like a learning summit and, all these, and do a visit on the properties. And so we were super excited about that. Had 30 people come into the first one in Colombia when, as I was telling you, I ended up in Denver. Yeah, when the pandemic first shut things down. So we've been talking about kind of giving that a go again this year, because I feel like it is one of the things myself and others in our group and others that I just interact with are people want to have events again. Like if they feel like they can travel somewhere, and it is one of the things that I have to say is super great about being in Florida, because life is pretty normal here. It really is. And so maybe this is where we would gather, but I think you can do stuff virtually, but at least a couple times a year, you can physically get together. I just feel like it deepens the relationships. And this is with my operating partners as well as with the investors, and even better if you can mix them all together, in a room together, because really everybody's, getting a lot of good, juicy learning and value out of that. So that's been one of the things we've been thinking of coming out of this isolation period.
We'll be right back after a brief announcement. Are you a busy professional, passionate about the work of your calling, yet realize that even though you love what you are doing, you're exchanging your time for money? You know that if you were to lose the ability to exchange time for money, your financial well-being will be in jeopardy. If you can relate, I have great news. Steed Tucker Capital is an investment company designed for professionals to develop financial independence built on solid passive real estate investments. Remove the anxiety of an uncertain financial future and go to steedtucker.com. Get your free one-page 10-step guide to passive real estate investing. Yeah, well, it sounds exciting, the things that are coming up and the possibilities. And certainly you have been talking really about, in general here, about this Maslow model of investing and applications of that model. But can you actually take us through the model and tell us what that model is and just the rudimentary aspects of the model?
Yeah, it's nothing rocket science. It's really just a framework by which look at really how you allocate your assets. And so, I kind of look at things as kind of like 10, 80, 10 of like maybe 10% would be like, precious metals, cash, things that are, sort of my highly liquid safety sort of thing on one side, right? That's maybe 1/10%. Maybe the other 10% on the other bookend there is things that like big asymmetric bets, like blockchain fund, things like this that are like, okay, this could really go in a direction that could make a magnanimous difference. So it's always worth, placing a bet there, right? But it's a small piece. And then like that 80% in between, to me, that's like you invest in what you know, what you understand, what you care about, what you want to impact. And I think that, this is why I personally don't think, okay, maybe if you're like $100 million plus person or whatever, yeah, you have a money manager. But I think for most of us, we should manage our own money, and we should put it into things we know about, we're interested in, we care about, because those are the things that we'll research and study and do proper due diligence on, so that we're making wise investments and that we're affecting our Main Street, because Wall Street is a little like whatever, right? Now, however, if you're big on trading, though, of that 80% there, maybe that's one of your things. Maybe you keep a big part in your bucket. For Peter and I, we like the hard assets. So we might have, 5 to 10% in the market. That's usually, we put that in our 10% with precious metals and cash and things like that, And then in that 80% for us, we're about 60% US multifamily, 40% farms. So that's our model, is food and shelter, like in the thick of the 80% of our allocations going into things we know about, care about, understand, and want to impact in a positive way for our society. It's right in there. And we feel like we can have control over those things as hard assets versus just in, big mega companies and that sort of thing. And so for us, we felt like now, prior to the pandemic, we had done a lot of short-term rentals, some boutique hotels, a couple private businesses, different things that were a little bit more higher on the risk curve and outside of sort of this normal realm. But we started gravitating towards this Maslow model of like, have your two core pillars in something super solid that everybody always needs, no matter what the economic cycle. And what we found is as we carried on through the pandemic, wow, actually, these are the two things that have really held that, rents have been, occupancy has been maintained, rent growth has been maintained, food prices have gone up, right? And they've been prioritized coming into the ports and these sorts of things. And so we thought, okay, because when most people first start thinking about investing in real estate, they're either thinking about like, oh, fix and flip and trying to make quick bucks, or they're thinking about buy and hold rentals, right? And they're just like, oh yeah, cash flow. Somebody told me I should just get cash flowing rentals, right? And so that's what they're thinking about. And if you think about it, the multifamily rentals and the farmland, with tree crops, things that are producing for decades, those are two kind of core consistent forms of cash flow. Yes, you're going to have your variation, but they're always going to be in demand. They're always going to be needed. And we were like, okay, this is a good framework by which people can start to grasp, because when you start talking about investing in commercial real estate, once you go beyond the single family home investing model, people are like, oh, but I don't even know where to start, a multifamily apartment or, office buildings, but gee, that hasn't seemed good, or retail and, triple net leases and all these things start to feel like complicated. And so that's how we kind of broke it down to just kind of like the way we started in single family homes is it's because everybody's at some point, at least in our generation, has bought a house and has gone through that process and knows what that's like. And so when it comes to investing in real estate, the easiest thing usually for people is to get a single family home rental, right? Because they're like, oh, I get that. I understand it. And so this is kind of that Maslow model is really kind of putting a framework of basic understanding. Let's think about what we all need. Let's invest in things that matter and that are always needs that need filled. And that in itself, I think de-risks a bit, what it is you're investing in. So that's kind of, that's where that all derived from.
Yeah. I mean, and that is a good model. And of course, the Maslow model is a model of human growth and development and
yes,
a triangular kind of thing. And the foundation of that triangle is actually those basic things of food, clothing, and shelter. And I like how you have applied that to that investing principle that in order to feel confident and to have the courage that you were talking about earlier, it's really important to have a solid foundation upon which to build that and to grow your portfolio from that. A lot of people are at least somewhat familiar with apartment investing or multifamily investing, and particularly in syndications. But not many people are familiar with agribusiness investing. So if you could take us through that and help us understand why you have selected that as one of the pillars of your investment platform.
Well, I will say I'm a little bit kind of predisposed, I think, to the sort of organic farming or growing any of your own food. Because in both of my homes growing up, both on the West Coast in Oregon, where I was born, where I spent my summers, and the East Coast, my school years, both parents had some farmland and we grew a lot of our own food and had animals and that sort of thing. So I've always been a little bit predisposed to sort of the farmland thing. And I do think it is one of those things, core human needs, that the demand is always there. And so it made sense to start investing there. Now, we have invested in a variety of different models, like sort of legal structures, everything from private equity, kind of syndication, similar to what you would find in a multifamily or some other commercial real estate property. And then also as turnkey rental farmland, kind of like the single family home, like a lot of us in California bought single family homes out of state in Florida and Texas and Pennsylvania, Ohio, places like this, where the house is rehabbed for you, the renters are put in, the property management is put in place, and it's all turnkey, and it literally just starts cash flowing. You get you get revenues net of the expenses every month. Well, the farmland is the same thing. And so as whether you're an accredited or non-accredited investor, if you have the money for the lots, what we call farmland lots, so land ownership titles, where you actually have title to the land, they will already have the trees planted. And we prefer tree crops because, your effort is more on the front end. You don't have a lot of churn. like every production cycle. Your trees are planted and they're going to be yielding for, 20, 30, 40 years. Okay. So we like that aspect. And so the lots, they are literally individually titled in owners' names. And then the owner has a farm owners association, just like you would have a homeowners association. That farm owner has a farm owners association of which they're a part. That farm owner association manages the farm manager, who are the ones daily out managing the crops in the fields every day. And then also the food distribution company. So the offtake agreements to purchase the fruit from those farms. Now, we've focused so far on coconuts and limes. Avocados will probably be something that comes into the mix as well. And so we have affiliations that own the entire process, like that food chain distribution. So they have a packing plant at Apartado in one of the big ports in Colombia, of which there's 3. And they ship up to Philadelphia. I think they're going to start Savannah, Georgia as well. We ship over to Rotterdam in Europe. So as the farm owner, you have this beautiful, it's just like those single family homes. Great. Here's my plot of land. Oh, the trees are already on it. Great. Okay. When is the cycle? Now, you don't get paid out every month or every quarter like you do, depending on the multifamily syndicator. Some do it monthly, some do it quarterly. This is typically once or twice a year, right? Because crops are in longer, bigger cycles, and you'll get your net payment, net revenues, net of your share of the expenses of operating the farm. Yeah. And so that's, like, as we say, without the tenants, trash, and toilets, you have this kind of ongoing, recurring, predictable income stream. And so, so for people who are looking for that sort of longer term annuity, if you will, this is a wonderful investment for them.
So I'm just speculating here, not particularly familiar with this model. In this particular model you're talking about, the investor has title to the property, so they actually become a farmer. And so in terms of taxes, they're going to file their taxes as a farm owner and get all the deductions and everything that goes along with the farm, all of those expenses related to that. And I guess most importantly, or maybe not necessarily most important, but the appreciation that goes along with that. But then, of course, land is not depreciable, but I'm suspecting the trees are depreciable, are they not? The crops are, or are they?
Trees are, it's not the same. It's not the same US laws because the farms are in Latin America, right? So it's not the same sort of depreciation tax law that we're used to. Now, do the farm owners benefit from the appreciation, which is the increase in the net operating income from the production of the farms? Yes, because typically, and in terms of paying taxes and that sort of stuff, the Farm Owners Association does all that on behalf of the owners. They actually custody your title, electronic title for you, and interact with the tax authorities to pay those taxes and stuff. Because unless you're well versed in Colombian tax law or a very fluent Spanish speaker, that's going to be challenging for you. You could do it. You could always hire a solicitor, an attorney to do it or whatever, but the company will do it for you because that's the preference of so many people. And so they make that part easy in terms of, paying taxes and that sort of thing. But there's not the same sort of depreciation write-off kind of tax law. However, most of the farms that we take them and subdivide them into smaller lots to be sold off to individual investors, they are typically around 3 years old, the trees at that point. And it's between year 3 and 5 that the trees kind of reach their peak growth and in terms of what they're going to yield from the tree. Then by year 7, for sure, they're at full yield and they'll stay that way for the next 20 to 30 years, depending on the fruit and its location and that sort of thing. And so you will benefit just like you would anything that's going to increase the market value. What's going to increase the market value is the higher dollar yield off of that crop. So yes, you will experience that part, but you won't have quite the same favorable US tax law in terms of fully depreciating in the same fashion that we're used to.
Well, thank you for walking us through that fascinating topic there. Well, Keke, tell us how we can get in touch with you and how we can get involved in your real estate group and in these agricultural investments.
Sure, sure. Well, you can find me at our website, which is www.globalinvestoralliance.com. There's a button on there to book a call. And that's always the easiest way for people to have, because everybody's situation is slightly unique typically, right? And so you have a quick conversation to try and find out what folks are trying to achieve. And if I can help, and if I can't, I'll send you to somebody else in my circle that's, maybe more in line with what you're trying to achieve. But that's the best way. You can also find me on LinkedIn, Keke Williams, Keke. And yeah, those are probably the two best ways to get me. So always look forward to a chat. We all learn from each other, and it's part of what makes this business, I think, so special. So really appreciate the time, Alan. It was great to be able to chat with you again and share with your audience.
Yes, Keke, it's been a delight being with you. I just have one closing question here, and that is, what was one of your most difficult setbacks in life, and how did you come through that? And what did you learn? I guess that's actually 3 questions in one. But
yeah, I would say, well, one of my most difficult setbacks in life was definitely going through a divorce and becoming a single parent with my kids as young toddlers, 3,000 miles away from home and family. And so going through that journey on my own, I learned that, sometimes friends are the very best family, because it really was a village of a great network of friends and neighbors that helped us succeed and all thrive. And so I think that, it's kind of that happiness is a choice thing. There can, no matter what your circumstances, right, you can choose to find some slice of light or some slice of happiness in it. And it's so hard sometimes in the middle of it, right? It's like we want to hang on to our pain or something, or our suffering. But it's like when you just kind of ease up again, kind of back to that horse, like we were talking at the beginning, just ease up on the reins a little bit, don't take yourself quite so seriously, or every moment or everything that you do, or every single thing you think you need to get right, because I sure as heck didn't get everything right as a parent, but we got through, and they're alive and they're healthy and they're, happy human beings. And yeah, so I think moment by moment.
Well, Keke, thank you for sharing that with us. Yes, going back to that courage, those difficult times take courage, and they take taking that breath and putting our feet back on the ground. Excellent example there. Thank you for being with us again today. It's been a delight and wonderful information you have shared with us. So even though it was my mess up that we lost the first recording here, it was wonderful touching base with you again. So thanks for being with us today.
Thank you, Alan. I feel lucky it worked out this way. So thank you so much.
Thank you.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.